All right, welcome everybody. Welcome to this weekend market analysis. It's Sunday here, Sunday afternoon, and quite quiet, and the best time for me to look into the charts and analyze in order to know the best directional bias to trade for the upcoming or in the upcoming trading week. All right, the charts look very interesting. Last week was full of action, and that is exactly the type of price action that we price action traders like to see. As a result, we have some very interesting pairs that we are going to be analyzing in this weekend market analysis. Just be patient. Listen and watch my analysis. I am sure they are going to make sense to you. Okay. All right, first let's look into the economical calendar to see those high impact news announcements that are scheduled for the trading week. All right, as you can see in the Forex Factory economical calendar, we have quite a number of high impact news announcements here that are scheduled to be released. Excuse me. All right, okay, the ones you want to really again give extra attention, very extra attention, they are all important, but you need to give extra attention to interest rate announcement, employment and unemployment data. You need to give them extra attention. One of them is that coming on Monday from New Zealand dollar axis, that is employment and unemployment data that will be released. It should affect all New Zealand dollar pairs. That is a news announcement that should cause heavy market volatility for that for all currency crosses, all New Zealand dollar crosses. Again, we have interest rate announcement for the Australian dollar on Tuesday. All right, another heavy one. Then interest rate announcement again on Wednesday for the New Zealand dollar. That means the New Zealand dollar is going to be feeling heavy heat for this upcoming trading week. You want to be very careful with all New Zealand dollar crosses. Okay. Then finally, the employment and unemployment data for the Canadian dollar on Friday. We just observed that of the American dollar last week, Friday. For this week, it's going to be the Canadian dollar and the New Zealand dollar. Right, it is similar to the NFP, so the same news, the same impact that we saw last week Friday is likely going to also repeat itself in the New Zealand dollar and the Canadian dollar for this week. At any rate, you want to pay ultimate attention to all of these red item news announcements here. Be very careful trading those currency crosses. Monday is bank holiday for Canada, but that will not affect our trading based on experience. All right, let's now move into the charts and conduct our analysis. The first pair here is the Swiss franc against the Japanese yen. Okay. All right, let's take a look into this pair. Well, you can see that I have now included some annotations on my chart. All right, just to give you a quick summary of what the chart is all about, so you don't waste your time struggling to understand what directional bias we are trying to trade, that we are looking at in most of these pairs. So, for instance, the Swiss franc against the Japanese yen, which is, I think, the worst pair in this review, you can see that we have a sign of market confusion. You have to be extremely careful with this pair. Then, at any rate, stick to your strategy and avoid unclear price actions. All right, that's the summary. So let's look into the long term in order to say why we have made this kind of conclusion for this pair. Well, as you can see here in the weekly time frame, price has obviously been trending to the downside, but since we had the previous swing low, price has failed to take out that previous swing low. Right now what we are seeing is some sort of a channel, all right, some sort of a channel, which is a sign of market confusion, and of course the channel should be heading to the downside, should be pushing to the downside, but not so clear. In the daily time frame, where we have the lots of confusion here, you can see that price has actually broken a rising daily trend line. Okay, a rising daily trend line. We got a breakout, but at the same time, you must anticipate a possible channel formation with a lower leg to the downside. So don't be surprised to see price begin to push to the upside again while you are looking for short entries. Okay, so if you look for short entries, chances are that you might be trading against some level of support around this area, because the current pattern is more like a channel. All right, even though the lower leg here has not been confirmed, but you have to be very careful, because if price makes that if that channel holds true, we are going to get a bounce from that point on. So for us, it is a heavy market confusion, so we are going to totally avoid trading here for now until we get a very clear price action with a good directional bias. All right, let's move on to the next chart, the American dollar against the Canadian dollar. What is our conclusion here? We are saying that price may have completed a long-term pullback. Okay, that means price was on a pullback all in the past few days. Then there's a daily rejection. That's in the daily time frame. There's a rejection which may be a resumption of the bears. Okay, it means it was initially bearish, but we got a pullback, which right now the day one price action is suggesting that the bears might have resumed. Ultimately, price is trading around a heavy resistance zone. You need to search for valid short entries called by your strategy. Okay, so taking the entries is totally up to you. I mean, for those of you who are not members of our live trading room, you have to rely on your strategy to take the entry. All right, so in the weekly time frame, what are we seeing? Well, here I am seeing this as a pullback. All right, I'm expecting price to come back down again. That is why we are saying price may have completed that long-term pullback. If you look into the weekly time frame very critically, okay, there is an internal trend line. We have drawn this before. There is an internal trend line. You can see that bounce. All right, this one here, before the breakout, it seems we are getting a pullback to retest that zone for another push to the downside. So you need to be very careful going long around that area. Well, I am not keeping this level because it is really not reliable, but in the daily time frame, I am going to follow price here. Remember, we had a short entry. We took a trade here, which was just too early in our analysis. And as usual, price will move up to take out all of those stop losses that were not properly placed before making that nice push to the downside. Right now in the daily time frame, just like we have seen here, the daily rejection may be a resumption of the bears. That's the rejection right there. Okay, it was rejected off these levels of former support, which are now acting as resistance. So from there on, I expect price to keep pushing to the downside in the American dollar against the Canadian dollar. Well, we may decide to add further entries here for short opportunities. Anyway, we will let you know in the Telegram channel where our new entries will be and where the stop loss will also be located. For the old entry, we are going to decide what to do with that. Our direction still remains bearish to the downside. I will be searching for only short opportunities. All right, in the forward time frame, you can see that we were in an expanding triangle. I have shared most of these charts with you in the Telegram channel over and over. Price reacted off the upper boundary of that channel, and now it seems to be pushing to the downside. So let's just keep that trade. All right, in the American dollar